It's October all over again. What was funny about October was that before the second week was over, countless analysts and high-level individuals in the financial industry were out in the media telling everyone this was all related to the blackout period and share repurchases, and it's going to be over soon, don't worry. Then November came and it continued. Then December came and it got even worse. Then global central banks, pension funds, share repurchases, and the Fed promising easy money sent the stock market rocketing higher. This could get interesting. You came here for the truth, so let me unveil that for you. Today we're going to talk about investors wetting themselves. I'm going to talk about this, and unfortunately some people are not going to be happy about it, but it is my duty to inform you of what's coming around the corner. The number of S&P 500 companies in blackouts ramps up in late March. We are looking at the companies in blackout period. Here you can see that it is going to escalate as of the end of March in through April and will finish off by May. This is very important because last time in October that we had one of these blackout periods, the stock market dropped tremendously. You had seen what happened as of October. That started to scare people. That started to create this cascade of selling, and it continued on through November. Even though the share repurchases were back on, even though December they were back on, it didn't matter because everybody was selling. And this has been a very big issue that has been brought up even in the mainstream media to some degree, that these share repurchases or stock buybacks have been the number one primary reason why stocks have risen in this period of time from the end of December into March. This is important, yet people don't understand it. I don't know why, but of course they're not willing to look at the truth. But you are here today to figure that out, so let's go in further. As you can see, nearly 100% of the companies are going to have a blackout period. That means no share repurchases at all during this period. Basically, you could say for all of April, it looks like there's going to be no share repurchases. That is very significant. When you've had a record $286 billion worth of corporate buybacks year to date, you know how important this is. Back in 2018, there was a record level stock buybacks. It exceeded 1.1 trillion by the last time I saw the count, and that is a record that will be broken in 2019 the way it looks like. This is absurd because there's no reason why this many companies should be buying this much of their stock right now if they thought everything was just fine and dandy. There's no way. Yes, they do share repurchases. I got it. I understand. But to the amount that they're doing it doesn't make any sense whatsoever. If you've been watching this channel for a while, you know specifically that we saw the selling actually go beyond into January, February, and then into March. I showed you the statistics on that, and yet the stock market didn't correspond at all. I'll talk more about that in a minute, but you can see here that corporate buybacks have escalated over the last little while to record levels. That's what I wanted to get to here. This breaks it down by sector, and you can see specifically going in, if we take, for example, everyone's favorite, the tech sector, it gives you the dates on the left-hand side so you can see for yourself exactly when, and then we can decide if this does correspond. So obviously I'm going to do videos about it throughout that period, just to give you an idea of each of the sectors and the fact that nearly 100% of the companies will be in a blackout throughout that few weeks. So while the mainstream media likes to put this off as if, don't worry, it's not that big of a deal, it's going to end soon, that's exactly what they said in November. They said that in December as the market's falling further. They're saying, well, the market's really oversold, and then people kept selling. And they kept selling into January and February and beyond because they were in fear. Now, obviously, you have the computer algorithms that get triggered by this. There are factors that people do not understand simply because they are playing the submissive role and they don't know what they're doing. You have individuals like Ray Dalio out there telling people, do not try and trade like me, like we do. You're going to get burned. Don't do that. He basically said, put your money in and let it ride. Essentially, what I'm worrying about today is that individuals have become too complacent. They take on way too much debt. They use margin every chance they get. They are doubling and tripling up on their leverage. There's no possible way that this is going to end well, and we are going to have a crisis at some point. Now, yes, the Fed is your best friend. I realize that. They really care about you a lot. However, this may backfire at some point because just like 10 years ago, remember something. In 2007, the problem was evident. We saw the housing crisis forming in 2007. 2008, things got worse. You saw bank failures. You saw the collapse that was being encountered that continued on into early 2009. The question I have is, why didn't they bail out the companies and the individuals in 2008? Why did they do it in 2007? No, they waited until 2009 because they want the destruction. That's what people don't understand. They didn't even look back 10 years ago. They're just thinking, who cares? The Fed is my best friend. We're going to hang out and have coffee together. But unfortunately, they will see what happens when you trust the wrong group. This is out of Market Watch. Options-related buying is syncing up with corporate buyback flows, which typically run at a massive pace this week as well, ahead of going into a blackout by next week. We've seen the markets come up considerably. I believe this article was actually from last week, so it's referring to that. However, regardless, we are seeing the stock market rising higher and higher at a time when there's a lot of uncertainty. The whole trade deal issue is as if it doesn't even matter anymore. They have pushed this back so many times. They gave a hard 90 days initially, and now suddenly it doesn't matter. It literally doesn't matter. That whole 90-day thing was fake. It's garbage. And yet today, here we are. Well, maybe it's going to be April. Then I saw some other news. It's June or July now, according to the SCMP. At this point, I don't really think the public even knows what the hell is going on anymore. Foreigners are not participating in the U.S. stock rally. Can you believe this right here? Foreigners buying U.S. equities. This is in the billions of dollars. You can see what has happened in this period of time. It looks like probably from October and onward, from 2018 into 2019, a considerable amount of investors are basically leaving the U.S. equities. How could that possibly be? Well, the number one buyer of U.S. equities is actually the stock buybacks, okay? This has been the number one. Obviously, you had the central banks being another big factor here, although in the case of the Federal Reserve, at least what they make public, they do not buy the shares directly. They are buying the garbage debt, and that is obviously even worse in my opinion. There's also the whole short squeeze that we've seen here, which is another factor I've talked about before, and underlying all of that is what the Fed is up to. The Fed loves to make sure that everybody knows they're going to be real easy. That's why they did the interview on 60 Minutes, to ensure that the public was watching. Don't worry, we're going to put it on the most public show you can find, not on CNBC, not on Bloomberg, not on somewhere that's actually applicable to the financial industry. No, they did it on 60 Minutes. Well, it looks like the public did get the message eventually. U.S. investors are still selling foreign assets. You can see that here. This tells you what's going on. They are purchasing in the U.S. very clearly. They do not like what's happening in China, for example. They don't like what's happening in Europe. There's a battle going back and forth clearly. In the case of foreign investors, look, if you are outside of the United States, you can go to Europe and you can look for bonds. You can look for different fixed income assets. Maybe you're going to get a negative return. Maybe you're going to get 0%. Maybe you'll get a little bit, a decimal point in your bank after the maturity of these bonds, which in many cases, like Switzerland, like other places, with a negative yield. 10 years, you're going to get a negative yield. Well, I don't think that a lot of investors are really interested in that. We're getting a lot of central bank activity in that case, but not enough actual investors around the globe want that. So what do? They buy US debt, and that supports the US dollar. People do not understand the way the financial system works. They're thinking, oh, the US is really strong right now. That's why our dollar is doing well. No. Learn the financial system, please. You cannot comment like this if you don't understand how it works. The Fed is our best friend. It's very clear. They love us. They want to go on picnics with us. And you can see here that this is the quantitative tightening schedule. You go through this. It shows you all the way to the end of June and what they are going to allow to run off. The way it works is that there's already a predefined schedule. You can see it for yourself. I've shown it many times before in full detail all the way through this year and beyond. That just tells you what they're planning on doing. However, QT is out the door. The market loves the fact that this is over way earlier than they said that it would be just even a year ago. They are also talking about this garbage that they previously told you that this was going to be just a temporary measure, but today, here we are, more lies the public swallows. If you found this video informative, please give me a thumbs up. When you give me a like on this video, you are supporting this channel. You are supporting the truth. So I do appreciate that very much. This is the type of information you do not get in the mainstream. You rarely ever see it in the alternative news. All I'm doing here, for those who are new to the channel, is taking a lot of data. I condense it down into hopefully 10 minutes, but usually I go way over that. If you think that it's too long for you, you can always change the settings here on the video and do a 2x, and you'll be able to get through the information faster. That's it. If you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually look through these books at the link in the description. It's gonna let you flip through the pages for yourself. If you want the audiobook, you can get that at themoneygps.com. If you want to find out exactly which companies are doing stock buybacks, watch this video. I break it all down for you here.